Hey, welcome back. It's JWalter here. Hope you had a safe and happy holiday and happy 2022. In today's video, I'm going to be taking a deep dive into the US housing market. What are we seeing right now? A lot of these stats are really bad news for home buyers, but stick to the end of this video because I have some positive news to share that could potentially shake up the housing market later this year. All right, with that said, let's begin today's video. So here's an article I found on calculatedriskblog.com. That's calculatedriskblog.com. And they reported some research based from Altos Research. Altos has a YouTube channel. They also post a lot of housing market stats. So they're reporting their research here. So as of December 31st, inventory was at 294,000 in the US. That's a 7-day average compared to 420,000 for the same week 1 year ago. That's a decline of 30%. However, I think it's a better indication to compare our housing stats right now to 2019. So when you do that, compared to the same week in 2019, inventory is down a whopping 61.5%, and that's from 764,000. So we have a severe lack of housing inventory in the US, and Altos Research is reporting that we're at record low levels right now. And you can see this here. The dots here, the dotted line here is a 7-day average over the past couple of years since January 2019. Gosh, 3 years, really. Gosh, I can't believe it's 2022 already. In any case, every January is this dot here, right? So right here, we're at very low levels, about 300,000 houses for sale. Compared to 1 year ago, we're just over 400,000. But in January 2020, just under 700,000 houses for sale, and then about 800,000 in January 2019. So severe lack of houses for sale, which is causing home prices to reach all-time record highs, which I'll share here with you in just a little bit. So inventory last week was about 4.2% below the previous record low that was set in early 2021 for housing inventory. Inventory also peaked in early September of this year. That's very common. Usually inventory does peak around the summer to early fall months each year. But inventory then, when it was an all-time high for the year, was at 437,000. That was the peak of the year. Inventory is currently off about 33% compared to the peak of 2021. So that's that. I want to share that with you. But also, there's a new housing market update, compliments of Redfin. At the time of this video, it's the 4th. They just reported this a few days ago, which was December 29th. So they are reporting that home prices have already reached all-time record highs, which is highly unusual for December. Usually home prices take a dip or plateau in the winter months as a lot of people put their plans on hold to buy a house. Also, there's a lot of limited houses available for sale as well. In any case, let's dive in here, and then I'm going to be sharing some positive news if you are potentially looking to buy a house, some positive news regarding that for later this year. In any case, Redfin's reporting that the median home price that sold rose 14.6% year over year. So compared to 1 year ago, we're at an all-time high of 361,000, and this is during the 4-week period ending December 26. As of course the number of houses for sale reached all-time record lows. New listings and pending sales. So new listings means a number of new listings or number of houses listed for sale. And of course, a pending home sale is when a home seller accepts an offer from a home buyer, they sign a contract. That's a pending home sale. Both of those dropped to their lowest levels since January. It's important to note this is very common. The housing market has its seasonality. In the winter months, usually the housing market takes a kind of a slowdown or slows down a bit. And so it's very common for the number of new listings to hit the market to drop. And also, of course, the number of sales and pending home sales to decrease as well. And then the chief economist for Redfin said that the slowdown of listings and pending home sales is a temporary consequence of the holidays. A lot of people put their plans on hold, right? In any case, I want to share all the stats with you for the housing market in the US. And this is for 400 plus US metro areas in the US. In the US, of course. And this is for the 4-week period ending December 26. Again, the median sale price, these are houses that actually sold, up 14.6%. That's an all-time high. But we're up 29.4% compared to 2019, compared to the same time period in 2019. But 14.6% compared to last year. Pending home sales are also up 55.2% compared to 2019. So even though pending home sales decreased slightly, they increased slightly, only by 4.2% compared to 1 year ago, we're up a ton compared to 2019. The number of new listings of houses for sale, this is the number of home sellers that list their houses for sale. That was down 6.4% from a year ago, but up 15.6% compared to 2019. So even though we're at still very, very low levels, we've had an increase of new listings. So it goes to show how high homebuyer demand is right now. And I'll share some stats with you regarding that. Active listings, that's a total number of houses listed for sale. In other words, active listings, another word for that is housing inventory. That fell 26.1% compared to a year ago. And we're also down 44.8% compared to 2019. So the number of houses for sale in the US is down 45% compared to 2019. All right, so I want to share some graphics with you, and I'll share some stats here regarding what we should be following in the months to come here to kind of get an indication about where our housing market is headed, because everyone's wondering what the housing market's going to do in 2022. So again, median sale price, as you can see here, 2020, we had a completely abnormal year. In June, home prices or home sold prices increased throughout the entire year, which is totally abnormal because in 2019 was more of a normal housing market where the median sold price peaked basically in July, and then it faltered or went down slightly and then kind of plateaued, went up very slightly towards the end of the year. So that's very common where the home prices tend to peak in the summer months and then tend to slow down. So that's what we saw initially during 2021. Home prices surged and they peaked really in July, and that's normal. But when they went down, that's also normal. But what's abnormal is that ever since October, home prices have surged by a great amount. So they went from about 350,000 to about 361,000, fairly significant amount, especially when we're looking at October through December when it tends to be a slower time of the year. So pending home sales are up 4.2% compared to 1 year ago. The red line here is 2021. It's been decreasing. That also follows the same trend line compared to 2019 as well. So here's housing inventory. In other words, is active listings, same thing. 2019 increase and it peaked really in the summer months. And then also that happened as well in 2021, last year. But we see here that inventory fell off greatly in 2019, but also the same thing happened in 2021. What's different though is how fewer houses for sale are now compared to 2019 though, right? Just over 900,000 houses for sale compared to 508,000 compared to 2019. So it goes to show how we have a very low amount of housing inventory, and that's going to be driving up home prices in the months to come. But again, I'm going to be sharing some stats with you to show how that may change in the coming months. So the Redfin's reporting that 40% of all the pending home sales went under contract in less than 2 weeks. So 40% less than 2 weeks. Compare that to 2019, it was around 25%. So really big increase for the number of houses that went under contract in 2 weeks. That's when a home seller lists their house for sale and to when they ultimately accept an offer. So only 2 weeks for 40% of the listings out there. When you look at over 1 week, so when a home seller accepts an offer within 1 week, it's at 29.6%. And so you compare that to 2019, it was about 15%. So we went actually double the percentage or double their share from 2019 to 2021. So it goes to show how fast houses are selling right now. And you can see this here. This is the median days on the market. So the time when a home seller lists their house for sale to when they ultimately accept an offer from a home buyer. So that is 26 days according to Redfin as of December 26 for 2021. Compared to 2 years ago, it was about 50 days. So houses right now are selling about twice as fast compared to 2 years ago, and even faster compared to 2020 as well. The market there was completely on steroids. Houses are still selling very quickly, but houses are selling even quicker this year compared to 2020. In addition, houses are still selling for over the asking price. So about 42% are selling above the seller's asking price. Compare that to 2019, it was about 20%. So about double the rate there as well. We're talking about price drops. So if we have an increase of housing inventory and or housing demand falls off, then of course we're going to have more price drops, and that could be an indication that that homebuyer demand is decreasing. So when you look at the number of listings that actually reduced their prices, only 2.8% of the listings that actually sold had price drops, super low amount. So about 97% of the houses out there did not lower their asking price. And that's very similar to the last few years as well. Very low percentage. In addition, houses on average are selling for over the asking price about 0.4%. So this is the sale price to list price ratio. On average, home sellers are selling their houses for 0.4% more than their asking price. And this is highly unusual compared to the last 2 years, but we're still very elevated levels. I mean, look at 2019. We're at less than 98%. In 2019, now we're at 100.4%. All right, so that's that. I want to share some positive news, though, if you're looking to buy a house, though, in the next, this year potentially, because mortgage rates have been increasing. So ever since the Fed announced they're going to taper their purchases of mortgage-backed securities and treasury bonds, they have been increasing. So this is good news if you're a home buyer, because if rates continue to increase, then that could slow down home buyer demand, and it could also increase housing inventory, giving more options for home buyers out there. I don't want to overpromise with you guys, because this is just kind of a short-term trends. We'll have to see if this becomes a long-term trend, and I'll share some stats here in just a little bit. So this is according to the Mortgage News Daily. They're reporting that mortgage rates right now, this is a report based on yesterday, we're at the highest rates in the last 9 months. It's not a huge increase, though. The highest rates in the last 9 months, it's a very small increase. It says we aren't insanely higher than anything we saw last week. From the lowest rates over the past 2 months, today's rates are roughly 0.25% higher. So not much higher compared to over the last 2 months, but we are still at a 9-month high right now. So right now, according to the Mortgage News Daily, the average 30-year fixed rate mortgage is around 3.29%. Also, what's happening right now is the yield on the 10-year U.S. Treasury note has been increasing. We're at 1.6%, and this is something we should definitely follow, because the yield on the 10-year U.S. Treasury note tends to move in line with mortgage interest rates, or I should say just the other. The changes in the U.S. Treasury note do reflect changes in what happens to mortgage rates, is what I should say. When the yield increases on the Treasury note, mortgage rates can increase as well. There's not a direct correlation, but there's some loose correlation. So I want to share the correlation between the Treasury yield as well as the mortgage rates, how those fluctuate. So when we look over the past year, let's look at the last year here as well for the U.S. Treasury yield. Look at the last year. So mortgage rates compared to 1 year ago, we're at 2.76. Right now, we're at 3.29%. So about what? About 0.5% higher compared to the all-time record lows we saw in January of last year, about 2.75. So what happened let's just talk about what happened early in 2021. So the all-time record lows of about 2.75% for a 30-year fixed rate mortgage. Those increased greatly. So from January through March, so about 2 months, a month and a half really, mortgage rates increased from 2.75 to almost 3.5%. So about 0.75% higher in a very short period of time. So what happened though is that mortgage rates fell. Rates were only about 3.45% for about 10 days, about a week and a half. So what happened, that didn't affect the housing market because rates dropped again. In my opinion, this year, we would have to see rates at sustained high levels in order to impact the housing market or in order to decrease home prices. And that didn't happen last year. Interest rates increased greatly, but they only stayed around about 3.45% for a very short period of time, and then they fell off. But ever since really August, the beginning of August, rates have been increasing greatly. In August, rates were very close to all-time record lows, about 2.8%. But now, 4 months later, we're at about 3.3%. So they've increased about about 0.5% again. And so we've been seeing this upward trend. And you can see that here when you look at the U.S. Treasury yield as well, because let's see. So rates decreased. We're at all-time record lows in January, really, end of January. And then they peaked in March. So have a look at this. This is the Treasury yield. So in January, they were at the lowest levels. Then they increased and really plateaued until August. So the yield on the US Treasury note increased from January through March, and that also correlates to what happened with mortgage interest rates. But ever since then, the rates have been decreasing, right? So they plateaued, or they reached almost record lows in August. And you can see that in August here as well. So we reached high levels here for the yield. They decreased, and then they basically hit low levels here at the beginning of August, which also correlates with what happened with mortgage interest rates. So what happened since then, as I mentioned, rates have been increasing ever since the beginning of August. And take a look at what happened with the yield as well. It was at 1.178% and has been increasing more or less ever since then, especially more recently. So right now we're at 1.6%. So they've increased about 0.5% in that period of time. And that also correlates with the increase of the mortgage rates as well. So if you're looking to potentially buy a house, here's something that you definitely should be aware of. Obviously, if you're buying a house right now, home prices are at very high levels right now. That's very hard to challenge that theory. So right now, home prices are at very high levels. And of course, we have very low housing inventory. Of course, we need a much more houses to be listed for sale in order to cool off this housing market. And what could be the silver lining going into 2022 is that mortgage rates could increase. They are expected to increase. They have been increasing more or less since August of this year. But the silver lining for home buyers right now is if mortgage interest rates rise enough to slow down home buyer demand, then inventory could increase because houses are not selling very quickly and maybe more people list their houses for sale. Time will tell. But if home buyer demand decreases, that would cause the number of offers to decrease, housing inventory to increase, the days on the market to increase. So that could be a potential opportunity for home buyers looking to buy a house. We'll have to see what happens here because, of course, as you guys know, I'm not a real estate fortune teller, but time will tell to see what happens with this. In my opinion, we would have to see elevated mortgage interest rates to be at sustained high levels for an extended period of time. Because as we look in this graph here, mortgage rates reached 3.45%. That didn't slow down home buyer demand. That didn't slow down home prices because they were at these elevated levels for a short period of time and then they decreased. So in my opinion, we have elevated mortgage interest rates at very high levels over an extended period of time in order to affect this housing market. So that's my take for today. I just want to give you one bit of advice too as well. And I've been mentioning this ever since I've been a real estate agent for the last 8 or 9 years. If you're looking to buy a house right now, and I've been telling people this ever since I've been a real estate agent, is that if you're looking to buy a house, do not have short-term time horizons. If you go to your agent and say, hey, I'm looking to buy a house, but I want to move potentially in a year, just rent. There's no point in buying a house if you plan to move in a year because during the short term, we don't know what home prices are going to do. Mortgage interest rates should increase this year, and that could affect home buyer demand. We'll have to see. But if you're looking to buy a house right now, have long-term time horizons of at least 7 to 10 plus years. Have a stable job, an emergency fund, and make sure you are buying a property or buying a house you really envision yourself living in for a long period of time. So what is your takeaway for today's video? What are your thoughts about this housing market? Comment below. Also, if you got any value out of this video, then please hit the like button. I greatly appreciate it, and have an awesome day.